We can see into the future, and it actually is looking positive. Thank you for coming back to yet another mortgage rate update and news video for the real estate market on my channel. I'm Caden Anini, if you don't know, millennial loan officer out of Phoenix, Arizona, and I'm ready to dive into a good amount of data, information, and just rate statistics that came up this week. Not a lot of impactful news that came out, but stuff that we are looking forward to into the future, as well as some stuff that is at play currently. I will dive right in as we shorten this. So circle May 10th on your calendars if you're a nerd about mortgage or real estate. It is going to be a big day. That is a CPI reading in May, and I'll explain right here with this information behind me. When we're doing the CPI, Consumer Price Index, we are replacing year over year numbers. What we want is we want higher numbers from a year ago. So when we're getting readings from January, we want a high January reading with a low number currently to show that inflation is really being curbed and brought down. That is what we can expect in March. In January, February, March might be tough, but April and May, that is going to be huge. What we want to see is consistent months over and over of us curbing inflation, and that is what we will most likely get. As you can see in January and February, and then April and May, we are going to be replacing these higher month over month numbers of 0.6, 0.5, 0.6, 0.6. Inflation is much lower than it was a year ago, and we are seeing that as we saw it in the fall. If we can replace these larger numbers with smaller numbers consistently, it will really show investors that we are on top of inflation, and that is what is really going to help mortgage rates. Inflation and mortgage rates move They are parallel with each other. As you saw when inflation was through the roof last year in 2022, mortgage rates flew up. Now on the decline, we have to show that we're stopping inflation. Dropping of mortgage rates tends to take a little bit more time. Also, the producer price index, another measure of inflation on the manufacturing side and the selling of goods, that was actually down 0.5%, which was lower than the expected 0.1%. So anytime we can have lower readings than even expected, that is a positive for the market. And we saw rates move slightly that day. Next, overall, mortgage applications are up. You might have seen this from people posting or anything. Mortgage applications were up 25% last week. I stated this in my last video that I saw a lot more activity in the market, and it showed with these positive numbers. People are noticing rates are down. But then also we're seeing that, like I said, backlog of 6 months worth of buyers that now want to get into the market, noticing rates are getting better, but it's also just their year to become a homeowner. New year, new homeowner. Next, we have housing starts. Let's pan over to our next slide here. A couple of things to show you. Overall, we have starts are down, permits are down, completions are down month over month. What's the positive of that? Is that inventory is going to stay low. We cannot keep up with the insane building rate that we need to maintain a healthy, balanced market. We just cannot do it. So when we cannot match these inventory numbers, we most likely will see prices maintain, if not grow, going through the year. With rates coming down and buyer demand hitting the market, conflicting with a low inventory, that is going to see prices jump. Do we see prices jump like they did in 2020? Probably not, but a significant amount. The idea behind all of this is I would suggest if you're on the fence about buying, having conversations now. As we see, May 10th is being circled as a big day for rates. A lot of people in the market think spring into summer is when the market is really going to pop off this year. If you're interested at all about buying, I would really start to have a conversation with your realtor or your trusted lender on figuring out that timeline, because ideally you want to get in before the demand hits and prices start to go up. Competition will bring multiple offers and unfortunately potentially missing out on a home that you could have gotten 2 months earlier. So we are just not able to compete. The completions number, 1.4 million, that was at 1.5. So we are now getting to our completions that we just are not completing enough to maintain that. Inventory I touched on, here we go. 970,000 units active as of today, and that was a decline from 1.14 million. We had 2.9 months of supply. 2.9 months of supply is what we currently have, and 4.6 months of supply is a balanced market. And here's what we have today. We have active listings, homes you can actually buy, not just homes that are on the market because some are pending, active listings of 690,000. That's only 2 months worth of supply. We're still a whole 2 months short of getting back to a balanced market. Technically, we're still in a seller's market, but there's not enough buyer demand quite yet to curb those seller concessions and really bringing the inventory down even more. And lastly, as I pan over here to our mortgage rate and movement this week, we have existing home sales were down, but is it such a negative thing? Because they were down 1.5% in December, but the expectation was that they were going to be down 3.4%. So we actually saw a higher number of existing home sales than we expected. So much more activity than expected. It's a lot more overall activity. I have a very positive feeling about this year when it comes to the real estate market. But I also suggest if you're looking to buy, I would try to do it in the first 4 to 5 months. While rates are still in a little bit of a higher space before rates drop into potentially the fives and everyone wants to flock back to the market, that would be the sweet spot, knowing that you can also get that 5% rate down the road after 6 months of owning that home. I hope this information was helpful for you all. I always enjoy trying to share all this information so that everyone is in tune with what is going on in the market. If anyone ever has any questions, please feel free to reach out. Would love to talk on anything or any questions that are brought up. Have a great rest of your day, and thank you again for following along. And don't be afraid to subscribe and hit that like button. Take care. Have a good day.